Hi, welcome to the Market Alert for Monday, the 2nd of October 2017. So, Friday, starting off with the pound, we had a couple of trades, pound moving lower, struggling to hold above the 134 line, which is this red one here, and the market moving lower there, trading down to the 133.50 level there. In the daily chart, well, you can see why the market's struggling. It's certainly a changing trend. I keep going on about this. There's a break of the trend line in this market. The 134 level has been taken out, which was a support for this market initially, but then Tuesday, Wednesday, Thursday, or Wednesday, Thursday, Friday actually, because this is Monday's action here. You can see the market still showing weakness and attempting to move to the downside there, and obviously all of the ills of the Conservative government and the infighting over Brexit and who's going to be, whether Boris is going to be the leader or whatever else is going on within the ranks, is creating a bit of weakness in the pound at the moment. So news for today, what have we got? There's only the manufacturing for the UK, that's out at 9:30. Then we shift over to the US, and once again we've got FOMC member Kaplan out speaking, along with the manufacturing PMI out at 3 p.m. Like I say, all high impact news items are not a problem unless it is a central banker that is actually speaking. Right, so have a look at Dow's action for Friday. So the Dow kicked off with the market opening lower, then traded sideways, and then we've got Carney speaking there. That's the red line that you see here, high impact central banker, and the ones you don't want to be on. It doesn't matter about the rest, it doesn't seem to make any difference anymore. It used to. And you'll also notice that I've got the purple line still in here. This is the 76% retracement that needs to be taken out. And as you'll see from even Carney's comments, there's a potential buy signal there. You can see how quiet the market was beforehand. We had 4 signals that failed to fill. Bit of a clue there that the market is quiet, and it's going to take a lot to actually kick things off, and that's from the open. So we see the market moving higher, say central banker activity, and then over to, I think it was Kaplan that spoke as well. There's a short there that the market fails, and you can see that they're desperate to get this through this level. They want the market higher. They're going to keep the complacency going with the general public investors, and then the market just becomes sideways. It just fails to really do anything, and then into the evening, same thing, market just sideways. One of those very strange days. It's Friday, nothing to move the markets, and as I've said before, the complacency now in this market is quite staggering. And then Windows did an update, and I lost the recording but managed to pull it all back. So you can see Friday just stuck in that range, 76% retracement, giving this market some grief. Let's have a look, see what's happened on the overnight market. So if we just scroll forward, you can see that on the overnight market, that prices have moved through, they've driven through. The kickoff on Sunday evening on the electronic market has driven the market through to make a new all-time high. And now prices are sideways. I think Trump made some announcement about tax reforms, and I think that's probably why the market's doing what it's done there. If you have a look at the daily chart, you will see that we've got a new all-time high in the Dow. I'm just going to remove this line. I'll try and remove the right one. Let's just pop that one back. So we've got a new all-time high sitting there at 22,462. The market is also through the 76% retracement there as well. Absolutely no volume. This market's going up on fresh air, and this also ties in with a brilliant article that I saw earlier this morning. Dancing on the rim of a volcano. Speculators have never been more short of volatility, which is self-evident when we look at the implied for the last few months as well. So as it says here, with the VIX ending Friday its lowest weekly close ever, lowest monthly close ever, and lowest quarterly close ever, and after the quietest September stock market in history, SocGen warned last Friday that the current situation is a dangerous volatility regime, citing the strong mean reverting tendency of uncertainty as a big reason for investors to brace themselves for trouble ahead. Absolutely true. And as it says, and you can see from the graphic, let me just scroll down slightly here so you can see it. You can see the new record short there. And what this all means is, as it says here, of course, judging by the new record short in the VIX futures, extending last week's surge, the speculative public is as levered, long and complacent as it has ever been. And this is, again, something that I've been going on about since Trump came in. The general public have been buying the Trump rally, and it's going to end in tears. It always does, no doubts about that. Now you can see the extreme greed, and if you did watch the Gordon Long interview with Greg Hunter, you'll see exactly why this ties in nicely with the chart that was shown by Gordon in that interview. So now extreme greed, well, it's delusion as well as greed as well. So a very, very good article, well worth a read there as well. As it says, it only needs something to ignite it. Whether I noticed that Trump said that there's no point in negotiating any further with Rocket Man, as he calls him, of North Korea. And if he does something overnight, then that should be enough of a catalyst, especially if it's, I wouldn't say nuclear, but wouldn't go that far. Well, you'd hope they wouldn't go that far. But you just never know with these psychopaths what they will do these days. But something like that comes out of the blue, because it will be an event out of the blue, he won't get any warning, and then that should be enough of a catalyst to give the market a shake, as in the past. But don't hold your breath, because sometimes the way the markets have ignored everything so far, you could have a nuclear war globally, and the markets could stay up at the moment the way things are, with the manipulation and selling the VIX volatility. But as it shows here, that the speculators are in new record short, and if a lot of the general public have caught on to selling the short and gone into funds where they've been shown that they can make more than they can in the banks and in the building societies because of selling this short, it's been a great trade for the institutions, selling short the VIX volatility on any spike, but that will come to an end. It always does. There's no doubts about that. It always ends in, shall we say, unfavourable and unpleasant terms if you're part of the sheeple investors that come in late into the market because everybody is in there and you haven't been in there. And that's again, if you look at the chart that Gordon Long gave to Greg Hunter, you'll see exactly the cycle phase of why the general public come in last, get out first, and then the institutions buy back. Right, let's have a quick look at the implied volatility for Friday before concluding. So on Friday's session, we saw the implied volatility down from 748 to 7.4. No surprise there. And again, don't need really to say anything else because we've just covered it with the VIX. Same thing for the implied volatility. Down in these lows, you can see how we've been since June, stuck in this range. They'll spike out. Eventually it will break out, and you will see things like we saw 10 years ago when we had the massive spikes in volatility when the market wasn't as manipulated, and we'll see these sorts of levels being breached once more. Not a problem at all. Right, that's it for this one. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.